Who poked the bear? Find out on the Issues Watch podcast. Hello and welcome to the Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. This episode qualifies for an annual CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/now to find out how. Quick disclaimer, the views and statement expressed herein are my own and not necessarily those of NJCPA or CLA. Okay, so why did we open up with Who Poked the Bear? You know, past few episodes I've been sitting here saying, nothing's come out, nothing's come out, nothing's come out. Well, why'd I open my you got a big mouth. Why'd I open it up? Because now the FASB came out with two ASUs. You're gonna find out one is pretty light, just an update, but they came out with two ASUs. Now, the reason why over the past few episodes I've been saying it's been light, and been saying for a while is, since they came out with the ASUs, after they stopped the FASBs back in around 2009, since they came out with the ASUs, they would come out with anywhere between 15 to 20 a year. And since COVID, it's been pretty much slowed down. Now, the real reason I believe it's been slowed down, and there's been comments about this, is remember, since the COVID timeframe, right before COVID actually, because they delayed some of the adoption effective dates for some of them, three significant pronouncements came out. You had 606, which was revenue recognition. You had leases, and then now we have CECL that's been out. So those are really three significant pronouncements that have come out in the past that hopefully, and I believe it's them, they said, all right, listen, we've got them, not just the people in public, but people in private, because we're finding out, with the issue of qualified personnel, that companies are having difficulty with their filings and timely filings to try and get all this new guidance put out there and accounted for properly. So they came out with two now, and it's we're over a quarter way through the year, and they came out with two of them now. The first one is ASU 2024-01, compensation stock compensation and profits, interest, and similar awards. Now, I've been seeing a lot that it's not being called stock-based compensation. Sometimes they're calling it equity-based compensation, which I think is the right thing to do, because you'll have somebody say profits, interest doesn't relate because it's not stock. So you'll hear me reference or other people reference equity-based compensation. We're focusing on the same thing. It falls under ASC the 718 section. So equity or stock-based compensation, we'll use them interchangeably. Now the CPEA, if you're not a member of the CPEA, I'm not a shill for them. I'm not trying to get you to join other areas, but the CPEA, Center for Plain English, is an AICPA membership section that puts out some really good information. I may not agree with everything that they put out, but they do put out good information, good guidance to help, direct you in different ways. They had spoken about profits, interest a while ago. They put out a nice information on it that I've actually shared with people in our office that have had to deal with profits, interest. The Private Company Council, the PCC, also previously commented on this, and the PCC is part of the FASB, and they put out guidance as it relates to what they think is better for private companies. Now, I know this starts getting deeper and deeper. They said we're going to stop doing FASBs and statement of positions. We still have EITFs, but we're still going to do the PCC and other areas. Frank and I, when we're doing an A&A update soon, one of our areas is going to be what is the PCC and what's the difference with the stuff they came out with, which the full gap has. But the PCC said, hey, there could be public companies that have profit interests that we have to deal with. While they're stock, they're registered stock, they may not have LLC issuances, but they may have profit interests too, and they should be considering. So they pulled it away out of the PCC realm and put it out with full FASB. So first, real quick, let's talk about profit interest. Profit interest refers to an equity right based on the future value of a partnership awarded to an individual for their services to the partnership. The award consists of receiving a percentage of profits from a partnership without having to contribute capital. It continues on, in effect, it is a form of equity compensation and it is used as a means of incentivizing workers when the monetary compensation may be difficult due to limited funds. Now that definition I just read you is not in the ASU. That was just, on the internet that I just Googled. Let me see if I can find the definition somewhere. And that's what's out there. So somebody else is saying right in there that it's a form of equity compensation. So the reason why I'm very interested in this is I have found too often that we deal with mainly private companies. We do no public work anymore. And you deal with a private company and you talk to the owners, especially of an LLC, and say, do you have any options that you issue? Well, they don't have options. They don't have stock. No, you don't have anything. And then you find out 2-3 years later, oh yeah, no, we have profit interests that we issued to somebody. Well, maybe they didn't update their organization agreement. Maybe they didn't update certain other documents, but that you'll find out that they have issued awards in some way to somebody. So the thing that I like about this ASU is it's not real heavy, it's not real deep, but one of the things is it provides illustrative examples involving 4 fact patterns to demonstrate how an entity should apply certain guidance and if profit interest should be awarded and accounted for under 718. That's the one thing I really like about this one. It's not real deep. They only, I think, have 2 definitions on vesting and service periods. And they really, it goes down and goes more into examples and helps a person. Now, of course, you're going to have an example that doesn't apply. But I recommend that you look into this. If you have clients that are LLCs, just make sure that talk with them about it. If you work for a company that maybe has something like this, I'd look at it. Again, it's not like you're going to be reading the ASUs relating to RevRec. This is much shorter. Okay, let's go into the next one. ASU 2024-02, codification improvements, amendments to remove references to concept statements. So part of the reason that they issue so many during the year, ASUs normally, is because they do come out with a lot of items that clean up the codification. If you remember back around 2008-09, they came out with the codification where they took everything that was gap-oriented, FASBs, EITF, statement of positions, everywhere else, and they pulled it all together into the codification. Well, when they did that, ever since then, they've been having a lot of cleanup to do, and I guess people go through and identify something, say, hey, you should clean up this, clean up this. So certain areas, this one, in addition to 2024-01, is effective for public business entities ending after December 15, 2024, and annual and all others for periods ending after December 15, 2025. This had just some glossary changes for expected losses and expected residual returns, financial instruments, obligations, transactions, transfer, just changing some of the definitions. But then it goes into some other good areas like intangibles and goodwill, assets and other environmental obligations, exit or disposal cost obligations. Now what you should be doing, you shouldn't be looking just at the ASUs. If you're trying to figure out how to account or disclose for something, you should be going to the codification itself. And what this does is it helps clean up the codification itself. If you don't know how to get into the codification, go to FASB.org and go down in their standards, and you can find your way right into the codification. It is free to some extent. There might be some limitations, but I would go to it and look into there. All right. That was the FASB, not a heavy lift, but the other area I want to go over real quick is the AICPA. Now, I don't have an update because they really haven't come out with anything. They've also hit us with a lot. They hit us with 143 and 145 are the 2 that people are focusing on a lot right now, auditing estimates and the risk assessments. Okay, those are the 2 big areas, but there are others that they have out there. But right now people are focusing on that. But I found something I found really interesting, and I was reading through it. I found interesting. When you hear about it, you're like, really, Brad? That's what you find interesting? AU-C Section 230 Audit Documentation. Now, you're probably sitting there saying, I think I've heard, that's been out. Yeah. It's effective for periods ending after December 15, 2012. So this is not new. But I happened to be going through something and I found this section. It was only a 13-page document. It was really easy to read. And it was, I think that you should go try and find this. If you can't find it, email me and I'll send it over to you. I found it online, so it's free content. I'll be happy to share it. But it's a nice document to go through to share with your staff. And even more, if you're at a company that you want to do lunch and learns, I would give this to somebody and ask them to read through it and talk about it. Because one of the things that Frank and I just constantly hammer on is poor audit documentation. And people just don't document properly. And I've seen now PCOB, and not just PCOB, I've seen it come down to the lower level where, of course, engagement teams are getting fined, but now I saw an engagement quality control review at the PCOB get fined, but also be hit with requirements for CPE and stuff on a non-public entity. So this document talks about, defines audit documentation, which is the record of audit procedures performed relevant to audit evidence obtained and conclusions the auditor reached. It talks about the audit file. It talks about closing the time to close down the audits. And there's two things I want to close on as it relates to this. Audit documentation that meets the requirements of this section and the specific documentation requirements of other relevant AUC section provides two things: evidence of the auditor's basis for a conclusion about the achievement of overall objectives of the auditor, and evidence that the audit was planned and performed in accordance with generally accepted auditing standards and applicable legal and regulatory requirements. It's got to be written down or typed up somewhere. It can't just be, oh, here's what we did. I used to do a lot of peer reviews. I say to people, it doesn't look like you did this. Oh, no, here's what we did, and they would explain it, and you're sitting there going, if it's not documented, it's not done. So get that AUC. If you can't find it, email me. I'll be happy to send it to you. It is a very easy read, and it gives you some reminders as to what to do. Okay, in closing, here's some ways you can get more accounting and auditing insights. Frank Boudelet and I will be presenting a 3-hour ANA update webinar on May 10th with a replay on May 17th. The Society's annual Audits of Employee Benefit Plans conference will take place virtually on May 16th. And the NJCPA Convention and Expo, June 11th to the 14th in Atlantic City, offers several ANA sessions. Get info on these events and more at njcpa.org/events. And of course, please be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.